Hi there, welcome to this week's weekly Forex Forecast, Monday the 9th of May. It's the time we look at the past week, what's been happening and what we can expect for this week. Great place to start your trading week by tuning into this, give you a bit of an insight to what is going on. Make sure you bookmark it and follow me on the YouTube channel to make sure you don't miss it the next time it has been released. Now, in order to access this weekly Forex Forecast, just head over to the ForexSignals.com website. You see the landing page there. That handsome chap. Scroll right down to the bottom and you'll see all our bells and whistles and so forth. Click on that button there. It says Forex Forecast. Pulls up this landing page. Now, if you want to get this sent directly to your inbox as well, pop your details in there and we'll send it the moment it has been released, so you're not going to miss a trick. Okay, so let's have a look at what we're looking at this week. So Max, my fellow mentor here at ForexSignals, he's looking at Bitcoin against the US dollar. He's looking at a potential 10% drop from where we are at the moment, all the way down to 30,000. He's got his reasons for that as well. 30,000 is the next key level of support. If we break through this support zone, then we could be back in to test that level there pretty easily. 10% move in Bitcoin. 10% move in Bitcoin is not a big move these days, is it? We're having these big swings in Bitcoin. So keep an eye on that as well. I'm looking at the Euro Oz trade here at the moment, and I'm looking at the strength of the euro against the US dollar, most actively traded currency pair on the planet. Normally when the dollar goes higher, the euro is going weaker. Well, of course that is happening because the dollar is so strong, but the euro is holding up in the basket of the G8. I'll show you that on the momentum meter in a moment. Euro is quite strong. Australian dollar is coming under pressure, having had their rate hikes already. Aussie is under pressure, so as trend followers, I like to buy the strong currencies and sell the weak currencies. Now we've broken through key level of resistance, maybe more to the upside there as well. Okay, and we've got Scott, our US mentor. He's looking at a bearish move in the S&P 500. He's targeting 38.35 as a key level, which basically comes into that demand zone that we saw back a while back. So he's looking at that. Go over to the report and read all his commentary. Now, Shane, he always maps out the week ahead in a day-by-day outlook, basically looking at the key market events that you should be aware of if you're trading the currency markets or stocks or so forth. So he goes through each and every day in sequence, so it's worth checking that out again. This is a great place, as I say, to start your trading week, getting this report to put you on the good stead for the trading day ahead. Right, now we'll jump on to the screens and look in more detail at some of these currencies. Come on. Okay, folks, let's start off by having a quick review of what happened last week. Last week was dominated basically by central bank rate decisions. Now, first off, we had a move in Australia, the first move they've had in their interest rates. They were expecting just 15 basis points, actually came in stronger than that. And the Australian dollar was buoyed by that first move in interest rates. Australian dollar is since coming under pressure. But on Wednesday, we had the FOMC. Now, that's the Federal Open Market Committee. It's the Fed when they decide on their interest rates. And the markets are pretty much priced in a 50 basis point hike. I spoke about it last week. But there were some analysts out there, some traders out there, that are actually getting themselves a little bit excited. You're actually saying that maybe we'll have a 75 basis point rise or maybe even a 1% basis point rise. So when they announced that they're only going to raise rates by 50 basis points, the US dollar came under pressure. The US dollar was sold off. The stock markets loved it. Stock markets bounced about 5% or so forth. Didn't last very long. Following on day, Thursday, stocks had a big retracement of that, and then the dollar started to push up higher again. The US 10-year yield now surging through 3%, up there at 3.15. And of course, that is seeing continuation of dollar strength. That's basically what's driving these markets at the moment. Then on Thursday, we had the Bank of England. Now, they also raised their interest rates. They raised their interest rates as expected by a quarter basis point. But the pound didn't like it because the follow-on statement by the Bank of England basically cited the fact that inflation could end up in double digits by the end of the year, and that economic outlook is basically going to be affected by that as well. Now, of course, if you have rising inflation and falling economic output, that leads to what's known as stagflation, which is basically normally precedes a recession. So now the British pound is under big pressure, under multi-month and year lows, I should say, against the US dollar. So big week in terms of central banks last week. Then, of course, we had non-farm payroll at the end of the week, just basically in line, but cementing the fact that US rates are going to have to continue. If you look at the actual Fed fund futures rate now, actually pricing in up to 3% by the end of the year, which is obviously going to be dollar supportive. Now, this is my momentum meter. Okay, now I use this to basically give me an insight to where the currencies are at this moment in time. I don't know how anyone can trade the currency markets with an edge without using something like this. Now, it doesn't, of course, predict the future, but it does tell me exactly where the money is flowing at this moment in time. Now, if I'm a trend follower, I want to have an edge. Clearly, it's a two-dimensional trade, the currency markets. If I'm a trend follower, two-dimensional, well, I want to buy the strong currencies and I want to sell the weak currencies. That is an edge, and trading is all about that. Just having a simple edge and exploiting it over and over again. Of course, you have losing trades along the way, but a simple edge plays out over time. If I'm buying strong and selling weak on the lower time frame charts, using this as the benchmark, it really does give me that edge. What's interesting about this reading at the moment, now this is the 4-hour chart you see here on the screen. Okay, and I've color coded them down here. You'll see it here on the left. The green line is the greenback. That is the US dollar. The US dollar against the euro is the most actively traded currency pair on the planet, right? So that basically means that most of the transactions in Forex go through this currency pair. It's actually about 30% of all transactions are in the euro dollar. So that stands to reason. If the dollar gets strong, the euro should get sold. And that often is the case. But what we're seeing at the moment is a strong US dollar, this green line here. But look at the euro. The euro is getting equally stronger. This is the 4-hour chart. That shows me that at the moment that the euro, of course, it's coming under pressure because of the dollar's strength, but the euro is strong in its own right. So clearly for me, picking an edge in the market is to buy a strong currency, the euro, and sell a weaker currency. Look here, you've possibly got some weakness coming into the Australian dollar at the moment, this orange line. But we are also seeing the weakness in the pound. This is the daily now. Okay, so here is the same currency pairs, but on the higher time frame. Dollar strong, euro strong, pound is weak, Swiss is weak, and look at the Australian dollar fading lower as well. So the edge is buying the euro and buying the dollar and selling these currency pairs as well. Now, this is also a great tool if you want to scalp the markets on the 5-minute time frame, for example. You can have this set at a 15-minute chart, bit noisy again on the 15-minute chart, but it basically shows you where the money is flowing. At the moment, if I were scalping the currency markets, my eyes would be looking on the shorter time frame charts at buying the pound and selling the yen. Okay, the yen is trading lower now. They're moving away from each other. This is a great place to be allowing your focus to focus on what is moving at the moment. Now, I'm not scalping on the 5-minute chart, but if I were, the pound against the yen mostly makes sense as well. But interestingly enough, the euro still is strong. Euro yen may be a potential setup there as well. It's an invaluable tool, I think. And of course, you can access this by heading over to the ForexSignals website. You can change their time periods, as I said. Right, so with that in mind, let's have a quick look then at the Euro Oz, and we'll look at the Euro Pound as well. Okay, so this is the Euro Pound on the daily, and as you saw from the momentum meter there, the clues were there that this is a currency pair that is now being bought up. Now, I always like to look at the key levels of support and resistance on the higher time frame charts to basically improve my win to loss ratio. I never like taking trades with my profit target through a major level of resistance, or if I'm selling, I never like to take trades with my take profit target through a key level of support. Now, what I see here at the moment is that the key level of resistance on the daily in there around the 149 level, we've now breached that. Okay, we've breached that. We're coming into this high that we saw basically last week around the 25th of April. For me, the path of least resistance now is clearly to the upside. When these levels are breached, resistance, it becomes support. It's where buyers become sellers and sellers become buyers. And we're expecting to see some support now. So 149 is going to be my support zone. And I've got to look now for my next profit target. Well, quite frankly, if we take out 150.5, which is pretty close to here at the moment, then my next profit target is going to be up there. There's not much in the way of resistance up to 153.40. Okay. Again, would I be taking a trade right now ahead of this high from last week? Possibly not. 20 pips to go. 20 pips profit with a 100 pip stop. That's the type of risk reward I don't really want to get involved in. So I'm going to wait to see how we deal with this level of resistance to the upside. If we break through there, this could act as a level of support. I'm going to be looking at that as a potential buy. So I want to see what's up here. If we break through here in the next few hours or so, chances are we'll have a bit of a pullback. I'll buy the pullback, and then I then know what is up there. I know there's not aggressive selling. Potentially, maybe it might have a right fall down, but I want the market to show its hand to me as opposed to me guessing what's above there. So I'll wait to see the break. If it does break and as a pullback, minor pullback, I'll be taking the trade. I'll be having stops below this level of support down there at 149, and I'll be targeting on the daily time frame at 153 and a half. That makes for a decent risk reward. Remember, you never want to be guessing what's through these levels. Wait for the market to reveal itself and then react after it has revealed itself. Far better way of getting the edge on your side. So that is the euro against the Oz. Let's have a quick look then at the euro against the pound. So this is a classic breakout, retest and continuation. So as I said, with the same with the euro against the Oz a moment ago, this is the daily chart. I think you'd agree that this level here that I'm drawing in at the moment is a level of resistance. Okay, this daily candle shot right through there. But we don't know. Is this going to have a massive amount of selling? Well, it did have a selling day pretty much on Friday. We had a new high created and then it pulled back. It was about a 70 pip candle, pulled back. Today, we're now seeing a continuation. Had there been a mass amount of selling, this would have come back and retested this level and maybe even breached it. It hasn't happened. So I now know that this level of resistance that we were looking at, there's basically not too much of a selling book out there. So for me now, the path of least resistance is for this to continue to drive higher. So euro against the pound, we know the euro is strong, we know the pound is weak, potentially now seeing some continuation in there, and I'll be looking at targets up there around 86 and a half, getting into that on the lower time frame charts on potential pullbacks using price action as well. This is a lovely little pullback here with that bullish engulfer there from Friday, and indeed off the bat UK Monday morning we have been just trading to the upside. So I've got my eyes on the euro against the pound for the long for the long trade. So keep an eye on the euro this week. Keep an eye on the euro. It's looking quite strong despite the dollar strength, and keep an eye on those softer currencies as well, which are trading lower. You may want to do some analysis on the euro Swiss. Maybe there's something going on there as well. Let's have a quick look at the economic calendar for this week. Very light. Now, as often is the case with the economic news, normally following on from non-farm payroll and a Fed decision and the Bank of England decision, normally the next week is actually quite light, and indeed it is very light this week. I'm using Forex Factory here. It's a free site. We've got one on our site as well, which you can use, but this is just as good. Basically tells you what is coming out. Now, even if you don't trade the news, I do think it's important that you're aware of the news events as they unfold. Often you'll see in the currency markets the spreads widen over news events, and the last thing you want to be doing is placing a trade, getting stopped out before the market's even moved, just because the spread has widened. So be aware of the news events as they come out. Anything yellow on Forex Factory is low impact, orange is high impact, red is high impact. Sorry, orange is medium impact and red is high impact. Okay, not a lot out today. We had a bit of a drop in China in their trade balance. We've got OPEC basically out on Wednesday, and you've got CPI, which is Consumer Price Index. That's basically inflation out of the US. Of course, you set your own time zones, just using that clock up there, so you know what's coming out. OPEC's an interesting one, obviously, with the oil prices where they are at the moment, and the Russian war. That we could be seeing maybe OPEC maybe trying to add more supply to the market. Certainly with Europe now saying that they will maybe not take Russian oil. And then, of course, maybe the Saudis will get involved, but there you go. Keep an eye on that. CPI as well. We've got PPI in the US later on in the week. As I say, really quiet week. So not much coming out on the data front, so don't expect too many drivers there. But, of course, keep an eye on the news as always. Even if you don't trade the news, you need to know what is coming out. Okay, well, that's about it for this week. Okay, so I hope you found that useful. Don't forget, pop your details in there if you want this sent directly to your inbox the moment it's been released. That way you won't miss a trick, or of course you can access it here on the website ForexSignals.com. Give us a thumbs up if you found this useful, thumbs down if you didn't. Don't forget to leave a comment as well. Anything else you'd like me to include in this weekly Forex forecast, do let me know. Always open to suggestions. Don't forget, of course, to subscribe to the channel here if you don't already do so. And that bell notification, again, will notify you the moment we release the next video. We are streaming live around the clock, up to 6 times a day now, 5 days a week. If you want to take part in that, of course, you can do so. Just head over to ForexSignals.com. You can take out a 7-day free trial. If that's not your thing, that is not a problem. Have a good week. See you soon.